Let's go live now to Melbourne. The Treasurer, Josh Frydenberg, joins us. Thanks for your time, Treasurer. Are you expecting the RBA to cut rates tomorrow?
Oh, look, those are decisions for the Independent Reserve Bank Board. But obviously, we've seen our interest rates come down quite substantially. So too the interest rates right around the world. The impact of that has been to help stabilise, I think, the housing market, where clearance rates are now above 70% in the major markets of Sydney and Melbourne, whereas they were around 50% this time last year. And we've also seen prices rise after a period of consecutive months when they fell. So let's just wait and see what they do. As the government, we're responsible for fiscal policy and they're responsible for monetary policy.
Have the last two interest rate cuts had that effect of, as you describe it, stabilising the property market, boosting it in Sydney and Melbourne, but it's had the effect on the property market instead of jobs?
No, in terms of the property market, that is absolutely fundamental to maintain confidence in that sector, because obviously you have a lot of construction jobs in new properties, but also it plays into consumer confidence, and household consumption is around 60% of GDP. So what happens in the housing market impacts the economy more broadly.
Economists are predicting another 2 interest rate cuts in the coming months. Does this mean we've seen the effect of those income tax cuts come and go?
No, they're going to play out for some time. We've already seen more than $17 billion make the way out of the tax office into the pockets of hard-working Australians. These were very significant tax cuts, indeed the most significant passed by the Parliament in more than 2 decades, which were opposed by the Labor Party. And we believe in lower taxes for hard-working Australians, and this money is being spent in the economy and helping to boost economic activity.
As you say, you are responsible for fiscal policy, not monetary policy. So are you considering at all expedited stimulus, and what form might it come in?
Well, you've got the tax cuts, you've had the rate cuts, we've got $100 billion of infrastructure spending which will go out over the course of the decade. That's helping to create jobs right now as we speak. So there is a lot of things that are already being underway in the Australian economy, which will continue to see us grow. Let's not lose sight of the international context too for the Australian economy. We saw in the June quarter, Germany, the United Kingdom, Sweden, Singapore and other economies experienced negative economic growth while the Australian economy continued to grow. And that didn't take into account the full impact of the tax cuts nor of the interest rate cuts. So the Australian economy has just completed 28 consecutive years of economic growth. We've got a AAA credit rating. We're seeing a strong labour market. The Reserve Bank has acknowledged that. And workforce participation is at a record high. When we came to government, unemployment was at 5.7%. It's now down to 5.3%, and we've helped create more than 1.4 million new jobs. You're eternally
positive, but at what point would you consider emergency stimulus? Is it when the interest rate, the official cash rate, would it be at 0.5%? Would it be 0%? Or do you look at other factors?
Well, like I said, the economy is continuing to grow while the rest of the world has actually, many countries have actually seen a contraction. And we've just announced for the 18-19 year, Laura, a balanced budget where the deficit of $690 million was 0.0% of GDP. This is the first time it has happened in Australia in 11 years. Now, if it was so easy, why didn't the Labor Party deliver a surplus budget, or indeed a balanced budget, when they were in government and they were enjoying iron ore prices at over $180 a tonne, a fraction of what it is more than double what it is today. So the reality is we have brought very rigorous and a disciplined approach to targeted spending. We've also managed to preside over an economy where the proportion of working age Australians who are on welfare are the lowest in 30 years, and jobs are being created. So we'll continue to monitor global events and domestic events very closely, in particular as well the impact of the drought, which has really devastated local communities and had an impact on the economy also as a whole.
One of those global events is, of course, the ongoing US-China trade war. You got together and basically led the charge in getting OECD nations to put forward a letter urging the US and China to sort this out, to do a deal once and for all. It seems to have fallen on deaf ears. Now Donald Trump's talking about a deal not being done before the 2020 US election. Does that concern you, and will you have to recalibrate the budget if that persists?
Look, when we put together the budget that was delivered in April of this year, we were very conscious of the ongoing trade tensions between China and the US, as well as some of the other economic challenges like the drought that we've experienced. But when it comes to the US-China relationship, our message publicly is the same as our message privately, is that we want the key players to come to the table to negotiate a solution, because having a free, open, rules-based trading system is in everybody's interest. And when you have a tit-for-tat tariff war, it's not just the protagonists that get affected, it's actually the bystanders as well. And 1 in 5 Australian jobs is related to trade. So we really do want a resolution of these differences.
Is China still a developing nation?
Well, I think the Prime Minister's made a valid point, and by the way, that's not a new message from Australia as well, which is that the Chinese economy has developed very strongly, and they are now subject as a developing nation to, on whether it's on trade or whether it's on environmental agreements, to certain things that do need to be closely looked at. So the Chinese economy has grown. We welcome that. Australia's been a great beneficiary of that. Hundreds of millions of people have been lifted out of poverty. But as the Prime Minister has said, it's a good time to have a look at that question.
And the trade concessions in particular that China enjoys under that status, yes? Apologies, Treasurer. We have lost your audio. I'm sure it was an excellent answer, but we'll have to leave Josh Frydenberg there. We'll be speaking to him soon. Treasurer, sorry to cut you off there. I want to ask about the retirement income review. You ruled out a number of things over the weekend, but will you consider making superannuation part voluntary for some subsections?
Look, our policy position has not changed, but the point is the Productivity Commission has recommended that the government undertake an independent review, and we've decided to accept that recommendation. And what I've announced is a panel of 3 persons led by Mike Callaghan, a former senior Treasury official, Caroline Kay, who's on the board of the Future Fund, and Professor Deb Ralston, a professorial fellow at Monash University, who's on the RBA's payments board, and is someone of extensive experience. And this will be the first time that we've had a holistic review of our retirement income system since compulsory super came in the early 1990s. So I think this is a very important time to understand the interaction between the age pension, between compulsory super and voluntary savings, particularly as we have an ageing population and people are living longer. And
just quickly, Treasurer, will the super guarantee be increased to 12% regardless of this inquiry?
Well, we've said our policy hasn't changed, and the Prime Minister and I have said that in the Parliament. But I did see in the papers today Greg Combet attacking one of the members of this independent review, particularly Professor Deb Ralston. Now, Greg Combet should know better. He's a former minister in a Labor government. It's the elected government of the day who decides who goes on these panels. And Professor Ralston is very deeply experienced in this particular area. When she wrote a letter to me as Treasurer, she was writing on behalf of 11 bodies, including the National Seniors and the Australian Shareholders Association and financial advisors representatives. And so she will bring great expertise to this panel, and she has the strong support of the government. But what we have seen is a pattern of behaviour from the superannuation industry, that any time ideas are raised that goes against their vested interests, they seem to complain very loudly about it. They should just make a submission like everyone else to this inquiry and stop lecturing the government as to who we should appoint on these panels.
Okay, Treasurer, I appreciate your time this morning.
Good to be with you.